Initially, when we wanted to make the show, we wanted to call this show Black Monday. And the reason why we wanted to call the show Black Monday is because if you looked at the charts when we woke up this morning, you saw that the S&P futures were down 2.6%. You saw that the KOSPI was down 7%. That's the South Korean stock exchange. If you looked at the gold price actually had a 10% candle. Now, a 10% candle on gold is a big event. It's only happened, I think, 3 times in recent history. Also, if you looked at the Treasury yields, the government Treasury yields, the T-bill yields were spiking this morning. So it really was like going to be a Black Monday. We're going to call the show Black Monday. That was going to be our thumbnail. And we were basically going to talk about how everything was working around a Black Monday. But then something changed. And what changed between that time and the time that the markets actually opened was that Trump tweeted and he basically said he's having productive conversations. Not only is he having productive conversations, but they're talking about ending the hostilities. Now, Iran came out and said, oh, no, hold on a second. We're not. He said, Iranian foreign minister came out and he said, there are no talks with Washington, and he accuses the president of buying time while regional de-escalation efforts actually go on. So he said that there's no talks. Trump came out and he said he's not sure why the Iranian media is denying it, but he's saying there were talks and the talks actually happened last night. So that's where we are today, and right now that's how markets have responded. So we started the morning off with Black Monday, but when you look at the markets right now, I mean, let's look at Bitcoin up at 70,700. The S&P has gone from being negative 2.8% to being positive 1%. The oil prices are down. If you look at US oil, so that is US oil. US oil is now at 90. And if you look at Brent oil, Brent crude oil is at 99. So the oil prices are very much responding to that. And so it's no longer a Black Monday as much as it's a Monday recovery. So that's what we're going to be talking about today. We're going to be talking about this Monday recovery, what it means. And I said the other day, I said that there are less than 2 weeks left of this war. And I'm actually going to double down on that conviction today. I'm going to show you why it's important that this war ends in the next 2 weeks. Because if this war doesn't end in 2 weeks, there are much bigger implications. So that's what we're going to be talking about today. I think it's going to be a big show. Let's get the show on the road, guys. Talk about Black Monday. This morning was brutal. I don't know if you guys do keep tabs on the US futures open or something like that. But let me tell you, it was absolutely brutal, especially when you look at the gold price, right? So the gold price this morning was the one that pretty much collapsed the most. You don't really see 10% candles on gold very often, but we actually got like a 10% candle on gold. And at one point, gold was trading at 4,100. Now remember, in the beginning of the war, gold, 28th of Feb, which was somewhere around here. Gold was trading here. It was trading at, there we go. So it was trading at about 5,300, and that came off a high of 5,600. And today, when you look at gold, trading at 4,400. The reason for that is actually quite interesting, right? So everyone says gold is a store of value. When the world is in disarray, gold is the ultimate store of value. But it actually doesn't work like that, right? What actually happens is you talk about gold and you say that when you're fearful about the future, when you're fearful about tomorrow, that is when you buy gold. In other words, if you're worried about inflation, if you're worried about the debasement trade and whatever else, and you're worried about inflation or whatever, that's when you land up buying gold. The problem is that when you're worried about today, you need to sell your gold because you need to finance things that are happening today. So if you think about like all the Gulf countries right now, they've got much bigger concerns, right? They've got much bigger concerns. Let me just get let me plug in my speakers here. But the Gulf countries actually have much bigger concerns than holding a store of value right now. Right now, they need to fix infrastructure. Right now, they need to be funding infrastructure repairs, oil refinery plant repairs and stuff like that. And when that happens, where do you go? Well, you go to the gold. You go to gold. And the reason why you go to gold is because gold is not a yield generating asset, right? And so it's not a yield generating asset. You need cash, and you need cash now. And also, chances are when you look at the gold price, you say, hold on a second, you know what? We bought this gold a long time ago, and if you look at the gold had an amazing run. Let's sell some of the gold reserves and actually fund what actually needs to happen. As I said to you, when it comes to gold, there's been very few times. Gold has only dropped 10% or more in a single day, 3 times in modern trade history, right? 1980, 13.2%. February 28, 1983, 12.1%. And January 31st, 2026, 11.4%. And today, gold was down 11%. What we also saw is what Peter Brunn said. He said he's never seen 9 red bird patterns. Okay, he says in 50 years of trading, I've only seen the 9 red bird pattern 3 times. And he says in all those markets, it took years and years and years to recover. So this is the 9 red bird pattern. I assume that he's talking about these 1, 2, 3, 4, 5, 6, 7, 8, 9 red candles. I went to ChatGPT and I asked ChatGPT, I said to ChatGPT, what is this 9 red bird pattern? She said it typically refers to a sharp upward move followed by a sudden, strong downward bearish candle. So up and then basically goes down. So that's how gold's performing. And I think if you look at this tweet here by Shanaka, he says, here is the mechanism. Iran oil war caused oil to spike above $112 a barrel. And he said, the problem is that inflation persistence caused the Federal Reserve to hold rates. The problem is that gold is not a yield generating asset. This is, I think, the punchline says, gold is not a yield generating asset. When yields rise and the dollar strengthens, holding gold becomes expensive relative to holding treasury. So think about it when you can put more money into treasury bonds, and you can earn 3, 4, 5% on treasury bonds, or for much higher, then holding gold actually has an opportunity cost, right? So the opportunity cost is the fact that it's not a yield bearing asset, and that's what this war's done. Because the war's put a pause on interest rates, on interest rate declines, people are going, hold on a second, by holding gold, there is an opportunity cost that we need to do. That we need to look at. Anyway, what I do think, by the way, if you haven't already liked the video, please do me a favor, hit the like button. It really helps me with distribution. I'm here, I'm bringing you crypto love. I was actually quite sick this weekend, but I'm back. I made it to the office to actually bring you guys a show today. Yeah, so I think the one chart that we need to look at is we need to look at the Bitcoin chart. And specifically, why I say I'm looking at the Bitcoin chart is because you remember that this is that bear flag that we were talking about. And I was hoping at one point that we would break out of this bear flag and we would continue in this upward trend. Now, almost poetically, and I did say this would happen last week, I said the price of Bitcoin is going to come back down here. Now, you can see that the price of Bitcoin bounced exactly like this morning in the midst of what we called Black Monday. This morning, we actually touched the bottom of this bear flag and we bounced poetically. Now, the new scenario is that probably what's going to land up happening is we're going to do something like this, get to the 75,000s, and then the question is what happens at that point. If we break through, then the bull trend comes back, and if we don't, then the bull trend actually lands up dropping, and then we can go again break down below this bear flag. Unfortunately, in a pattern like this, the probabilities are that we're going to break down in this bear flag, but I guess that we now have another chance to go back up and actually to break out of it. What I think is extremely fascinating, but actually has a good reason behind it, is how well Bitcoin has performed relative to the store of values in this war, right? And it's because of what I told you, right? If you look at how Bitcoin has performed, call it that Bitcoin's up, I don't know, probably 5% now. That was done earlier before. Let's actually look from the 28th of Feb. Let's just see how it looks 28th of Feb. There we go. So from the 28th of Feb to now, Bitcoin's up about 5%. And if you look at the other assets, if you look at gold, if you look at silver, gold's down 20%, silver's down 30%, the S&P down 5%, oil's up 50%. It's quite good to see how Bitcoin is performing, but I'll tell you why it's performing as well as it is performing, right? So the reason why gold is not performing is exactly because of what I said to you here. The reason why gold is not performing is because if you need to take care of your current cash flow requirements, when do you need a store of value? A store of value is almost like a savings account. And when do you need a savings account? When you're saving. The problem is that when you have an emergency, a catastrophe, and you need to spend your savings, the question is, what do you liquidate? And that's when people start liquidating gold. 1, because it's had a good price run. 2, because it's a non-productive asset. It doesn't actually produce yield. And 3, because it's a very liquid market, right? And so, as I said before, when you're fearful about tomorrow, you buy gold. But when you're fearful about today, you sell gold. And that's exactly what's happening. Now, you may say, okay, well, if that's the case, isn't Bitcoin exactly the same thing? Well, yes, it's not a yield-producing asset. It does have the same characteristics as gold. The big thing here is that not a lot of central banks, not a lot of sovereign nations actually hold Bitcoin, right? And if you don't have it, you can't dump it. So with gold, they have a lot of gold and they have a lot of gold reserves, and therefore they can dump it, right? But if you don't have something, then you can't dump it. So that's why right now everyone's dumping their gold, and they are using that to repair infrastructure, prepare for the worst. And I'll show you in a second what the worst case actually looks like. But that's why people aren't dumping Bitcoin, because they just don't have Bitcoin left to dump. Retail had Bitcoin, funds had Bitcoin, but right now the people that are actually liquidating their gold assets are actually sovereigns and sovereign nations, basically, because they're saying, especially in the Gulf, because they're kind of saying, look, so a lot of this is driven by individuals fleeing the Gulf. We flee in the Gulf. We need to cash in our gold to actually take money. We need money right now, whether it's for infrastructure, whether it's to flee the Gulf, etc., etc. Now, if those individuals, by the way, they're probably not, but if they were holding Bitcoin, they wouldn't have to sell it, and that wouldn't actually take the price down. So I think net, this war has been actually good for Bitcoin. I mean, I hate saying wars are good for anything, but this war actually has been good for Bitcoin. It has shown the world that there is a new use case for a different kind of store of value, one that is transferable, one that you can carry around countries, etc., etc. So that is the gold Bitcoin situation. And just to give you some perspective, if you want some perspective, gold now erased 7.3 trillion market cap since the Iran war began. The entire crypto market cap is like 2.5 trillion. So gold erased that. By the way, silver erased the entire crypto market cap since the beginning of the war. So just to give you an idea of how it's going. And if you look at the Bitcoin versus gold chart, now this is a very cool chart to have a look at. Remember that people were criticizing Bitcoin because it wasn't a store of value when the store of values ran. Everyone was referring back to this gold chart, which specifically Bitcoin versus gold chart, which specifically Bitcoin started losing traction to somewhere around August, but majority came around October 10th, right? That was when we really started losing against gold, and gold cemented itself as a store of value. The good news is that if you look at this chart's just broken out, and that's like a very a good sign to see. You're now looking at this chart saying that Bitcoin is starting to outperform gold as a store of value. Why does that excite me? Because remember that I kept saying to you that if Bitcoin's not money. It was supposed to be a peer-to-peer electronic cash system. It's not money, right? Then we had this narrative of Bitcoin is a store of value. But the problem is when store of values were riding or running, then Bitcoin started to underperform all the stores of value, right? You can see that over here. So with that in mind, now what we're getting with this breakout is people going, hold on a second, maybe this Bitcoin thing actually is a store of value. Maybe gold had too much of a run. Gold's starting to pull back. People aren't selling this Bitcoin thing. Why aren't they selling this Bitcoin thing? Oh, because it's actually transportable. And you know what? When you actually have to leave the Gulf, and by the way, a lot of people have left the Gulf, right? A lot of people have left the Gulf. When individuals are leaving the Gulf, they don't actually have to sell their Bitcoin. They can just take it with them. And I keep telling you guys a story, and I'll repeat the story again because it is a story that is very close to my heart and actually could have changed the fate of of generations of my entire family. So I told the story before, and I'll tell it again very quickly. My family, on my mother's side, were very rich goldsmiths in Iraq. So they used to live in Iraq, and in the 1950s they were very rich goldsmiths. But because they were Jewish, they had to be evacuated out of Iraq overnight. So my great-grandfather was a very big trader, and his family were very big goldsmiths. And what they did was, when they heard that they had 24 hours to vacate or to be evacuated, what they did was they took all their gold and they melted it into almost like a bucket, so to speak. And when they arrived at the evacuation flights the next day, and they had the entire generational wealth in this bucket, they tried to get it onto the evacuation flight, and basically at the evacuation point to the airport or whatever it was, they basically stopped them. And they said, you can't take this. And they basically took generations of wealth and they left it behind. And then how that changed the course of history was that because from that point, my family was so broke that actually for the first couple of years of my mom's life, she actually grew up in a tent. Like that's literally how poor that family was. So you want to talk about like the need for something like this. I think now people are actually talking about this need here. Yeah, so that's an anecdotal story. You know, like you don't need it unless you need it. And then when you do need it, if you don't have it, that's a massive problem. That's a massive problem. Yeah, so that's that. So let's talk about why we had Black Monday, or why we had so much escalation over the weekend. I think the escalation that happened over the weekend in this war was as a result of the way Trump was acting. Trump was squirming. He was panicked. He was throwing like basically a tantrum. Trump was throwing a tantrum over the weekend. Initially, Trump said, we are getting very, very, very close to meeting our objectives, which is, by the way, the information that I had when I posted this, and I said there's less than 2 weeks left of this war. We'll talk about that in a sec. But Trump first said, look, we're getting very close to meeting our military objectives, and very soon this thing should be winding itself down. We're not really going to declare a ceasefire. The reason why we're not going to declare a ceasefire is because you don't declare a ceasefire when you are obliterating the other nation. Listen to this.
NATO is calling for a ceasefire NATO is calling for a ceasefire in the Middle East and to reopen dialogue. What do you say to the
Well, look, we can have dialogue, but I don't want to do a ceasefire. You know, you don't do a ceasefire when you're literally obliterating the other side. They don't have a Navy. They don't have an Air Force.
So Trump was saying, look, we're obliterating the other side. We're not really interested in a ceasefire. We're nearly at the end of our, nearly at the end of our military objectives in Iran. And then what happened was there was a big problem. Then Trump really escalated the war. Now I want you to pay attention to the time here. The reason why I want you to pay attention to the time here is because that is at 7:44 p.m. 𝗘𝗃𝗏's time, which is, let's say, it came out at 1:51 a.m. On the 22nd, which means that this deadline is like 12 hours away. And what he said was, if Iran doesn't fully open without threat the Strait of Hormuz within 48 hours from this exact point in time, the United States will hit and obliterate their various power plants, starting with the biggest and most important one first. Thank you for your attention on this matter, Donald J. Trump. Now, this is a massive threat of escalation, and this is when the market turned on the weekend. I don't know if you guys were watching weekend markets. I was obviously watching weekend markets. But if you want to see when the markets, remember all the other markets were closed, and if you go onto the hourly chart, what you can see is that there was a massive drop at some point on the weekend, and that was that drop over there, right? What was that drop? All the way down to 67, to 60, to 68, which is exactly on that line that we wanted to respect the chart structure. So we are now respecting the chart structure, which is a good sign, as long as we break out above here. Otherwise, we could break down below this bear flag. I really hope we don't, but that is one of the things here. So what happened was Trump basically said, look, we will hit Iran where it matters the most, and that is the power plants. And the problem hitting the power plants is the whole thing around desalination. If you don't have power and you don't have desalination, the problem is you have no water. And that's a big problem, right? And then, Iran basically said, look, we're not, number one, they struck the Israeli nuclear site, which is in Dimona in Israel. They also said that they basically also launched, they launched a missile to a UK base in the Indian Ocean that's 4,000 kilometers away. So they're showing their military capabilities. And they said, look, Iran threatened to destroy every desalination plant in the Middle East. Nobody realizes the damage to water. So they started to threaten water. And that shows you that this war is moving way beyond oil into two other types of warfare that I want to speak about. One of them is a form of financial warfare, and one of them is a form of lockdowns. Now, I know we all hate the word lockdowns, right? But there is a new lockdown in town at the moment. Now, I don't know if it's reached your country, and I don't know if it will reach your country, but it's important that you know about the new lockdown that is hitting town. It's not the type of lockdown that you have to stay at home and wear a K90 mask, or what's that mask called? K53, K90, N90, the COVID mask. It's not that kind of lockdown. This lockdown is actually an energy
afford
lockdown.
To leave the house because energy prices are so high.
I want to show you. It's a story. It's an Instagram story from a friend of mine who made it. Let me just.
Introduced around the world, and no, it's not like the 2020 lockdown. They're calling it an energy lockdown. And what that means is that a lot of countries are now putting in measures like you should only work from home. You should only leave your house for essential travel. Airlines are also cutting their flights. American Airlines have just dropped their flights by 5% this week. Now, energy prices are going up, and it's going to become a situation where some people actually cannot afford to leave the house because energy prices are so high.
So her name is Danielle. You can go and follow on Instagram at 𝗏𝗏𝗏𝗏. And she talks about this new kind of lockdown. And I think it's I don't know if it's reached your country, but it is getting to some places in the world where there is food rationing, there is energy rationing, there is the price of things, the price of gas at the gas pumps is going up a lot, exponentially a lot, not like by 20% or by 10%, but in some cases it's doubling. And why? That is because they're scared that they're not going to be able to get energy, and so they're trying to discourage people from using energy. And so that's the one type of warfare that's actually going on, and people are starting to feel this. I mean, listen to this. In Philippines, the diesel price has doubled this year because of the extreme dependence on imported fossil fuels and lack of adequate risk mitigation strategies. No strategic petroleum reserve, no supply chain coordination. Basically, all those countries are starting to feel it, to fall apart. Vietnam, I have a friend in Vietnam who's exactly the same thing. Now, United Airlines CEO says we don't expect oil to fall below 100 for the next until 2027. Now until the end of 2027. Now, get this. The problem is that flights are a function of the price of fuel. If the price of oil goes up, the input costs for flights I think flights are this. When it comes to flights, I think the two biggest costs are wages, people, and fuel. And I think that with most airlines, fuel is actually number one. Okay, in some airlines it's number two. And so that's the one kind of warfare that's going on. And that's what I'm calling inflation warfare, energy constraint warfare. Right now, the world can't afford to be energy constrained. Not in the age of AI. When it comes to AI, we need as much energy as we can get. We need to be able to fly around the world, etc., etc. Right now, oil has dropped below 100. So the guy's right. But the question is, will it stay below 100, right? So the US oil is at 80. It actually went all the way down to 84. In a situation like this, you always need to be short oil, right? You always need to be short oil when oil price is high, because you never know when there's going to be peace deals or negotiations. The next kind of warfare, so the first kind of warfare is this energy warfare. The next kind of warfare is probably the more dangerous warfare, or the one that Trump's paying much more attention to, right? And that's something that also happened last night. You'll remember when I started the show, I said the one thing that happened on Black Monday was that the US T-bill price actually spiked, right? So if you take the beginning of the war and you look at the rates on 10-year US Treasuries, that rate has gone up 14%. Now, what does that actually mean? It means that when the US is taking debt, and the US have a lot of debt, they have $39 trillion worth of debt, to be exact. When the US actually takes debt, they are now paying 13% more to finance that debt. So you know all this thing that Trump's doing around the Fed and lower rates, etc., etc. The Trump can shout as much as he wants at Jerome Powell and the Fed. The truth is that right now, when the US go to the market and say, "Hey, do you want to buy our debt?" The market's saying to them, "Hey, yeah, we'll buy your debt, but we don't trust your debt anymore because your debt is, we don't trust the dollar anymore. We don't trust your debt anymore, etc." And so this is the real warfare. It's financial warfare, right? And the financial warfare is basically by devaluing or by putting less trust in US debt. By putting less trust in US debt, it's making this war very, very, very expensive for America. And I think this is the part that's hurting Trump the most, right? So the part that's hurting Trump the most is, yes, high inflation is hurting him, but the part that's hurting him the most is the fact that his debt is becoming cheaper, or he has to pay, his taking debt becomes more expensive, right? And so you can see that in the tariff situation that we had earlier this year or last year, if in that tariff situation, what you can see is Trump eventually relented on tariffs, and he put the 90-day pause when the 10-year Treasury yield spiked. So the pain that's actually being inflicted, the warfare that's actually being inflicted is not only physical warfare, not only is it energy warfare, but it's also financial warfare, and this is the financial warfare over here. So 𝗘𝗃𝗂𝗪 says the bond market is now more broken than the energy market situation, as seen in April 2025. Trump will have to intervene very soon. And that's what Trump's doing. He's trying to calm the markets, because what he's realizing is every day that the US actually takes more debt. It's starting to, remember, when you take debt, you lock your interest rates. Hey, I'll give you debt, but you lock the interest rate. You say, okay, well, if you want to sell me debt today, it's going to cost you, you're going to have to give me 4.45%. Whereas if you wanted to take debt before, you would have only had to give me 4%. Now, over 10 years, just think 10 years, 4%, 4.45%. It's a massive, massive, massive difference in the amount that you actually have to land up paying. And so the real warfare is actually this financial warfare. And this is the part that's really hurting Trump. And that's why I think that this is going to hold. I say that in the first week of April, I say around about Easter weekend, this war is going to be de-escalated by a lot. And the reason why I say that is, one, because I don't think that this is good for Trump in a midterm year. Two, I think this is an interview that was done by 𝗏𝗏𝗧𝗏, and he was quite clear about what he said. You can listen to it.
We are taking out their missiles, their missile systems, and the factories that build those missiles. And now the General Kane, Secretary Hegseth, are leading a campaign to destroy all the fortifications along the Straits of Hormuz.
Just to put a fine point on this, though, is the president in the process of winding down this war or escalating the conflict?
Again, they're not mutually exclusive. Sometimes you have to escalate to de-escalate, Chris.
Okay. NBC News is reporting that President Trump.
So that's the situation. I really think that they've taken out all the big targets now. I think that the job is done in Iran. I think if they carry on in Iran and they carry on just fighting, they don't have as much to gain. They've taken out all the nuclear missile facilities. They've taken out all the missile manufacturing facilities. They've taken out the entire old leadership. And I think now the marginal benefit of continuing the war versus the return that they get, alongside the fact that there's going to be high inflation, that the 10-year rate actually
I think to spike. That he thought he would be able to get in, get out, and
where is this news coming
from? And that is a problem. Okay. But what we don't, as I said.
Okay, let's close that. All right, so that is what's happening on the war front. Again, if you are trading oil, you can go long and short on Bluff, and there's a link below if you want to do it. If you do open an account, you get $1,000 free oil position. This is, I think, the best place to trade this and 𝗙𝗪𝗔𝗏. If you want a decentralized exchange, if you want a centralized exchange, no KYC, you can trade it on Bluffen. The code is CL. CL is crude oil, basically. I also want to just quickly talk to you for 2 seconds about one of our new sponsors, right? Now, one of our new sponsors is actually Metamask. Now, I know that you're thinking about Metamask and you're going, hold on a second. Metamask is that old ETH wallet that, you were used to use once upon a time. But actually, when I met them, that wallet has actually converted itself into an entire ecosystem. The first thing is it's completely cross-chain, Bitcoin, ETH, Sol, etc. I didn't know that about Metamask, I've got to be honest. But what I also didn't realize about Metamask is that you could do so many things from your Metamask wallet. I didn't realize that you could trade perps directly from your Metamask wallet. I didn't realize that you could trade prediction markets directly from your Metamask wallet. I didn't realize that you could get a Metamask card and spend directly from your Metamask wallet, right? So if you want to have a look at it, there's links below. Go and have a look. Just go and have a look at all these amazing things that you can do with Metamask, because I really think that I was blown away. Metamask was always the one of the it was like one of the founding wallets in crypto, and I used to have a lot of Metamask wallets, and I was like, these are old wallets. But if you look at where they are now, it's absolutely amazing. All right, fam, I will see you guys again tomorrow. Until then, let's hope that what happens is that we respect this flag, and let's hope that we get ourselves to a position where we're at about 75,000, and then let's hope that we actually break that 75,000. See you again tomorrow. Until then, trade well, my friends.